Welcome to EnergyRogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
Is energy relaxing? I don't know if it
Energy is very relaxing. In fact, it's so relaxing, folks. What we want you to do now that it's lunchtime is get you a nice cold beverage.
I didn't hear the bubbles that time. Oh, there it is. Okay. Now
Brian's going to talk to you about why in the world am I drinking a cold beverage in the middle of March when we should be drinking a hot beverage.
Yeah.
You want to talk about natural gas? Let's talk about natural gas.
Well, actually, we're going to talk about OPEC today.
We are going to talk oil today, aren't we?
We are going to talk oil today. I will touch on natural gas, and we'll do it
at the end. We're just going to
we'll just hit on that real quick, because what I want to show you is we just did this in our community this morning, and let me blow this up a little bit.
And when he's saying community, he's talking about when you join and subscribe to Energy Rogue Premium, you get to be part of the Discord channel. In our Discord channel, we talk about this stuff all the time. We're always talking about the market daily and in the length that we have talked about. We talk about declines. We talk about the production interruptions and people who are actually taking production offline on purpose because of the price. All that was done. We do that in Discord court, part of Energy Rogue Premium.
Yep. And if you want to come join us, if you want to get access to over 150 charts on supply, demand, imports, exports, storage, stocks, and so much more, it's only $89 a month. If you spend an hour a month looking for this information, come here, because it's going to be more cost efficient. If you have access to some institutional plans, great, fantastic, go for it, because those cost thousands of dollars a month. Rogue Premium, which is what Bill was describing, is $179 a month, gives access to our Discord channel where we post videos and really dive in deeper on the issues. A lot of people, somebody on Twitter was calling us out saying, well, $200 for, something that tells me about weather doesn't tell me anything. And I'm like, you're missing the point. Production, supply, demand, imports, exports, storage, stocks, and the possibility of changing fundamentals. For example, this was an exercise we did this morning in our community. We started with 102 BCF a day, and our declines every month are about 3.4. New production is going to slow. Even if it only slows 12.5%, we could end the year below 97, almost 95 BCF a day. That's massive.
That's true. And folks, I want you to take a look at this, because sometimes I have to point out where Brian might have overstated something, because, that's my job. Anyway, notice he kept decline flat. But with all this run up in production, decline will be increasing.
Yeah.
And so this could actually easily be a lower number.
Right. And the curtailments here, the new production coming on, I only throttled it down by 12.5%. It may be more than that. Anyhow, so if you want to learn more about natural gas, come join us. It's, again, there's links down below. Rogue Edge is $89 a month. You get access to our weekly video, charts, daily email, weekly video recap, a PDF, daily support and resistance, and insight into so much more. And then if you want more interaction, and kind of engagement on your questions, you can step to Rogue Premium. Would love to see inside, but we like getting the commercial out of the way. And for those that are interested on gas, weather has not really been helping.
That's right.
I mean,
that's why I'm pouring a cold beverage. It is over 70 degrees here in Oklahoma right now. And so I'm telling you what, weather has not been the friend of the natural gas industry. However, we've got a cold front getting ready to move through this week. So pay attention. You're going to see a little bit more demand. And by the way, that decline, that was strictly only on the supply side. We talk about the demand side too. So come join, come get into Discord channel. Man, I tell you what, you'll be surprised about all the different things we look at. Look at that demand chart right there.
Yep. This is just the residential and commercial. And what you can see is outside of this 1 week, we really haven't had much of a winter. So by rate of comparison, we have 1 week, but we haven't stayed up high enough. So that's the reason storage is up there. That's the reason producers are taking some action. So we are going to take questions today. So we wanted to get gas out of the way, but let's talk a little bit about OPEC. OPEC puts out a monthly oil market report every single month. And you can, if you just Google OPEC monthly oil market report, they have an Excel sheet down here. They have this PDF over here. We took a look and read all 93 pages and put the highlights into this. And this is what we're going to talk through today. Is kind of overview the global oil market dynamics. So when we take a look at crude oil, you have price movements. The ORB is the OPEC reference basket that rose by 1.5% month over month. Brent on ICE rose by 3.2, NYMEX WTI by 3.7. This is interesting that the OPEC basket only increased by 1.5. Meanwhile, Brent and WTI are up over 3. Huh. That's interesting. That's fascinating. I don't have a conclusion there, but that is going to be very interesting. Part of the reason that crude oil has stayed, whoops, wrong one, stuck in this range between 76.26 and 81.29 is really due to the fact that there's so much concern about the growth rates of demand. And
Right.
that's so Bill, why don't you walk us through this one a little bit?
So really what we're talking about here is the economic growth rates. And if you'll notice that all these are positive, okay? So they're not really predicting anything going negative. Though.
And this is OPEC's vision of what the growth rate expectation is. And we are not financial advisors. We are just commenting on OPEC's market report, which again, you can Google search and find that.
So you can see that the U.S. has sort of got their growth rate down. And so it's interesting because I don't know all the features that they use. Like in the U.S., we slice and dice it a little bit different. But overall, they try to keep everybody flat. And when you look at this, we've always said China's where it's going to happen. China's where it's going to happen. China's where it's going to happen. India is where it's happening. And so that's the one thing that most people don't really pay much attention to is India. And what the other thing is that India, I think now is at 1.2 billion people, and China has just slipped under 1 billion people. And so
really? I didn't see that.
I think so. I think this is the demographic problem that China's starting to have. And Peter Zion talks about this all the time. I'm not endorsing him or ragging on him. He's just one of the sources you can go to. But the ideal here is, 1.2 and they just slipped under 1 billion. That's not, folks, that's a differential of the size of the United States. And so when you start thinking in numbers that big, these numbers mean something, because United States going up by 1.9%, and in India going up by 6.6%. Okay, that 6.6 would be an equivalent if they were at the same standard of living. It'd be equivalent of the U.S. going up by 18%. So that's how significant this really gets in. So, I'm a big believer that you got to pay attention to India, because I think they have a better chance of creating a middle class, which is where all this energy is used, than China does. So,
well, and you can see advanced economies or mature economies like the U.S., Eurozone, Japan are really stagnant. Both of those, or all three of those, are modest, not even modest growth rates. But the U.S. is actually up from the projection last year. The projection last year was 0.8%.
right.
So we're
Now,
up almost 1% of growth.
let's do a quick disclaimer here. This is OPEC, and they might be talking their book a little bit.
Sure.
Trying to show.
Well, I mean, this gets back to what you were saying about Peter Zion. We're not going to advocate that anything is truth, but you have to look at all sides of the puzzle.
Right.
My personal opinion, I think OPEC has some of the strongest, most dependable forecasts, and I look to them on economic forecasts, and they've been more right than wrong on comparing economic forecasts. So
Right.
that's my opinion. I could be wrong, but that's my opinion. So kudos to you, OPEC. Thank you.
Here's the big thing. You don't see it going down.
No.
Demand is increasing.
No.
Based on these economy projections.
Well, and that's just it. So the global oil demand or demand forecast is expected to be 2.2 million barrels year over year. You got to remember there's some curtailments happening. I don't think we're going to cover them here today, but we did cover. We keep track of where all the OPEC countries are. But if you look at the 2.2 million barrels a day year over year, that's going to add a lot. OPEC is already curtailing, what is it, 1.5?
Right. Well, actually, I think it's Saudi Arabia doing 1.5 by themselves.
1.5, and then the other curtailments, which, in my opinion, again, not financial advisor, but in my opinion, are more a wash.
Right. So let's talk about that. When they talk about curtailment, they're talking about curtailment of their goals. And sometimes these countries are not meeting their goals. And so they can call it a curtailment, but if you're not producing enough to meet your goal, that's just not performing. That's not necessarily a curtailment. So you need to read that data with that kind of mindset.
Right. And listen, if we look at this is saying the OECD growth, or the Organization for Economic, what is it? Cooperation and Development. These are advanced economies.
Right.
And what you can see is a 200,000 barrels a day of demand growth. So not much growth is happening. It's in the non-OECD, which includes India. So you've got India, emerging economies that are really going to drive the growth. That's where the growth is going to be. And following 2024, 2025 is expected to grow by 1.8 million barrels a day. So that's pretty big. So now let's talk about supply. Non-OPEC is expected to grow by 1.1 million barrels, and the key contributions are coming from US, Canada, Brazil, and Norway. This is where I differ a little bit from OPEC, and I think that US production is going to tread water at best. Canada's adding some rigs, so I think that's coming into play. Brazil and Norway, that's interesting. I didn't see anything about growth in Norway, but maybe.
I may push back a little bit on Canada because I'm not sure that they have the ability to get it out, or excuse me, to get it out. So,
There's
uh,
an issue with that. Sorry for our Canadian friends. We know a lot of Canucks, so I can say that, right? Is that rude?
I have
Canuck?
no idea anymore. I can't keep track.
Okay.
But the idea,
If it is, my apologies. I've heard that as a term of endearment. So if I'm
yes.
wrong, I apologize, my Canadian friends.
So I'm concerned that they have more of an issue of getting it out of the country. Now, I'm going to tell you, I'm not very well versed on this, and I'll have to brush up on it. So I would be concerned about that mainly because of the Keystone Pipeline. That's what I'm thinking of.
Right.
So
Right.
I could see Brazil. I could see Norway. They just announced a new project in Norway. So they're sort of a oxymoron with their clean energy, but we need money, so now we have to drill for oil. So
Right. So then OPEC production is expected to increase as well. Venezuela, Guyana, there's multiple issues there. Venezuela is in OPEC, Guyana is not. Now let's take a look at product marketing and refining operations. This is the key differentiator between just looking at supply and looking at demand, because it's more nuanced than that. You get into refining margins, gasoline markets, gas oil,
right,
and the global intake. So when you look at refining margins, they've strengthened. Gasoline markets are stronger. Gas oil, there's been performance improvements in Northwest Europe. So this is interesting that supports some of the refining economics, which means the refiners are making a little bit more money, right?
right. Which allows them to actually buy more product and refine more. And we've talked about this before. We got 2 new refineries coming on, one in Nigeria, one in Mexico. I think Nigeria's 550 or 650,000 barrels a day, and Mexico is 350,000 barrels a day. And so I think what it's got to is I know what it is with Nigeria is that they are tired of importing refined products and now want to import crude oil. They feel like they can grab those refinery margins for their own economy.
Right.
And Mexico just needs additional refining capacity to refine the crude oil that they have in Mexico. And so those two, I think, will be very interesting to see how that plays in the market. But those are not going to come on until late 2024 or early 2025.
Something that I've learned, because I'm doing a little bit more work and activity out of the Middle East, especially with our friends at the Gulf Intelligence. So thank you for having me on. Really appreciate that. And it's Gulf Intelligence. They are out of the United Arab Emirates. One of the interesting things that you talk about with the oil market is not just flat price. Is if you look at flat price, you're missing a big piece of the equation. That's the tanker market.
Right.
So when you think about the rates of tanker markets, I mean, look at these percentages month over month. The VLCC rose 11%. Suezmax dropped 19%. I mean, these are big moves on a per barrel basis, right? And a lot of these shipping rates are predicated based upon Red Sea traffic, the Straits of Hormuz,
Right.
and the activity that is in with Israel Hamas, with some of the attacks in Yemen, and there's another impact. These rates are important because some of the routes that they're taking are that much longer.
That's right, and they can't turn them around fast enough. This concept floats through all free market economies. I mean, I don't care if you're talking about crude oil or you're talking about Walmart. They all talk about how they turn over the supply chain, and that's what we're talking about here is the supply chain. And and if we had to go to longer routes, we'd have to build more tankers. And so it's interesting that, Brian, what I always say when we're at Lean Energy, everyone has a calculator. So
Yes.
people know where the margins are, and they try to capture a part of it. And that's what we see in the tanker market. It is probably one of the most volatile markets to be in because of how many changes are about it and how many people play in various parts of it. So,
Right.
so yes, this is the big variable, I think, in a lot of the crude oil by the time it lands on shore somewhere,
Yeah. So the tanker market's super important.
especially for the Middle East crude oil.
Right. So let's take a look at U.S. crude imports averaged 6.5 million barrels in February. Exports averaged about 4.6. I mean, these are big numbers given that the U.S. produces 13.1. So those are big numbers. But let's take a look at China. China, their imports averaged 11.2 million barrels, and that's a decline of 1.8%. That's what people are watching. That's part of the reason that we haven't quite gotten over 80. In my opinion, we're not financial advisors. See all the disclaimers below. India's crude imports increased by 9.4% to reaching 5.1 million barrels. And this is what you're talking about, right, Bill?
That's right. And not only that, the part and the piece that we're trying to put together is understanding the storage facilities in both China and India, because they are opportunistic buyers. So anytime they see the crude oil price go down, they're trying to buy and realize what we're seeing that's imported today was bought 3 months ago.
Right. There's
So
going to be a lag. And so that lag, the projection of the economic growth that we're talking about, where is it? Here. These are annual, but there's monthly expectations on oil supply, demand, all that type of activity. But when you take a look at it, the projection is that we're going to have a modest growth this year. So now let's take a look at commercial stocks. OECD stocks are down by 26 million barrels. And commercial stocks stood at 1.3 billion barrels. Is that right? That can't be right. This is 1.3 thousand barrels. And then total product stocks, 79. Yeah, there's not much happening on the stock side. Balance of supply and demand. This is key. This is where we need to put our focus. The demand for OPEC crude in 2024 is projected to stand at 28.5 thousand barrels a day. Bear in mind, they're currently supplying about 26.5. OPEC demand for 2025 is expected to reach 28.8. So that's only 0.3. So it does reflect a 1.1 million barrel a day higher than the estimate for 2023. So that's just
Brian,
a
when we
modest.
looked at it, we show the total global demand to be at about 100 million, a little over 101 million barrels a day.
Right. Yep.
And so what you can see from here
I'm
is
so glad they did that. It makes it easier for math.
it is so much easier for math. So you can see the percentage here that they're talking about. And so what it means is that even though the OPEC demand is only growing a little bit, most of the big demands has been being made up by U.S. crude oil. Now it looks like it's going to have to float to either being made up by people like Venezuela, other non-developing nations or developing nations, whatever you want to. I wouldn't call them third world, but this is going to become interesting because we're looking to supply the increased demand from areas that are extremely volatile politically. And so
Right.
this is going to make the geopolitics increase the volatility in the crude oil, I think, by 2025, 2026.
Again, not financial advisors, but that's just I agree with that sentiment and that standpoint. So, what is the growth trend? 2023 was about momentum. The forecast for 2024 is slightly up, and then 2025 remains unchanged at 2.9%. Again, these are right here. If you want this presentation, send us an email down below, or better yet, join, because we just shared this document in our Discord community. So if you want this presentation, the backbone of it is coming from OPEC's monthly market report. So
so you know what the importance of this particular world growth is?
What's that?
I believe me and you had a boss one time that we finally convinced him that 2% of a large number is a large number.
I don't think we convinced him. I don't think we convinced him. He's still stuck in the same brain logic. So that's why we created our own company. So
dang financial guys.
Yep. So the 2024 OPEC forecast is 2.2 million barrels a day of growth for 2024. Asia Pacific, downward adjustment, non-OECD growth is really driving it. That is places like India. I mean, a 6% growth rate on 5.1 million barrels a day that's a lot of barrels. So
right.
Now,
so let's do a stop on that for a second.
Okay.
That 6.6 is on their economy, not on their crude oil.
That's true. You're right.
If their economy grows by that crude oil demand could grow significantly more than 6%.
You know what? That's something that we got to that we need to add to our analysis, is really because we use economic growth rates as kind of a one-to-one correlation, and that's not necessarily accurate.
I don't think it's true at all. It might be in the U.S., but I don't think it is in the rest.
If anybody knows that, drop us a comment. So, and we are taking questions. So if you have any questions, we're going to wrap through probably 3 more slides and then call it a day. But we are going to take any questions that are out there. I did in the YouTube add the link to the OPEC website if you want to read all 93 pages. If you don't, you should consider joining a service like ours for $89 a month, and you'll get access to reports and insight like this. So, what are the near-term economic and oil expectations? Before I read this off, what are your expectations, Bill?
Well, I think so. I guess we have to go across the world. So let's talk about the U.S. economy. It's going to continue to grow. I think it's going to grow at a slower pace. We're going to see some ups and downs as we go along. But it's a pretty strong economic engine, and it takes a lot to shut it down. Now, I will never underestimate the ability of the government to really make some really stupid decisions that could shut it down. But for the most part, they're going to be overridden just by the general population. So I think the U.S. economy is going to stay flat to plus maybe 1 to 2%. Really depends on how much government regulations get in the way. Oil demand, I think, is going to continue to go up. People always talk about the electric cars coming in. I get that. But if you'll take a look at the market, most of the market for electric cars is in China.
Yeah.
And they're still growing their oil demand there too as well. So I think we've seen some pushback in the U.S. A lot of it's just the sheer cost of the cars. And for that matter, the cost of every car is pretty high right now. So, but I think the oil demand is going to continue to grow here in the U.S., but I don't think it's going to be stratospheric by any stretch of the imagination. I think it's going to be continued on the growth pace it has been on. yielding anywhere from 1 to 3%, which is what it's going to continue to do as we grow in population. Petrochemicals is going to be an interesting thought, though. I think it's going to be a significant more growth in petrochemicals in the U.S. and also globally, because we haven't stopped using plastic. Everything we're using petrochemicals for, everything. It doesn't matter whether your car is electric or whether it's a internal combustion engine. You still need petrochemicals to make it.
Right.
And so I think it has a strong ability to grow. So now tell me how I compare to OPEC.
Okay, so U.S. economy expected to remain healthy and with robust private household consumption in the first half of 2024. Oil demand improvements in air travel, road mobility are expected to bolster increased jet and gasoline demand. So that's going to increase things. Petrochemicals, healthy petrochemical feedstock requirements for ethylene are also expected to drive LPG demand. So that is going to be interesting because we've had a lot of supply, at least here in the U.S., of ethane. So, so that's going to be an interesting way, but that really drives over to plastics, right?
Right. It drives over the plastics, ethylene, and also they're talking about it's going to drive the propane prices a little bit as well, the LPG.
Yeah. So anyway, that's the near-term expectations. What is the non-OPEC liquids production forecast as per OPEC? And again, not financial advisors. There's a link over in our YouTube that will take you right to the OPEC supply. This is kind of a high-graded 30-minute review of 93 pages. 2024 non-OPEC liquids is expected to grow by, 1.1 million barrels a day.
So we probably need to do a timeout here real quick, Brian. Realize that when OPEC talks about liquids, they're talking about crude oil and LNG, not LNG,
NGLs.
NGLs.
Yes. And
so when they say liquids, that's what they're talking about.
Right. And that's part of the reason, again, for $89, you can have access to all that information into interactive downloadable charts, and you can actually start to analyze and assess some of these. If that's of interest to you, there's information down below. Would love to see you. But when we take a look at the OPEC's liquids production, an increase of 1.1 million barrels a day. And where was that coming from?
U.S. saying Canada, yeah, Brazil, Norway.
U.S. I see as doubtful. Canada, you're saying doubtful. I see a little bit more optimism there. Brazil, I
think they're doing production in Canada to do that. I just don't know how they're going to get it out. And that's the part I don't understand. I'm not going to say they can't do it. I just don't understand it yet.
Right. Norway and Brazil, I'm a little less educated. If you have a guess, drop it in the comments. But when we
so let's talk about this real quick. This goes back to the tankers. So if we're going to increase something 1 million barrels a day, right?
Mm-hmm.
And it's going to be exported from somewhere. That means we need 1 tanker per day more than we have now.
1 tanker, okay.
Because a tanker, a large tanker will hold 1 million barrels. And so that means 1 tanker per day has got to be on the sea. That's that is going to be that's going to be an interesting thing. Just talk about volatility in those tankers. Let me tell you something. That's going to create it.
Yeah. So 1.1 million barrels a day. I think that's a little too optimistic for the production growth, unless Brazil and Norway are doing the heavy lifting, in my opinion, sitting here in the United States. 2025, the production is expected to grow by 1.4 million barrels to 71.9. The main drivers are going to be US, Canada, Brazil, and Norway. Again, we've already touched on that. We are going to talk through 2 more slides. If you have any questions, let us drop them in the comments. And if if you enjoy this or learn something, please like, please share, please comment. All
If
that
you're on
stuff
YouTube,
really
subscribe.
helps. Yeah. So key drivers of growth and decline in U.S. supply. 2024 drivers. The non-OPEC supply growth in 2024. We've already talked about that, and pretty much the same in 25, except for Russia and Kazakhstan added to that. So these are the drivers of growth and decline. And so the growth in 2025 is expected to come from the same cast of characters, but also Russia and Kazakhstan. Declines, oh, this is interesting. They see growth and decline in Russia, but they're seeing declines in Mexico and Angola in 2025.
I think Mexico is a geopolitical thing. That'll be interesting. I I think I think Mexico could end up being a geopolitical hotspot, but it's going to be interesting to sort of watch that.
Yep. So we're going to sum up, but the EIA report just came out like an hour ago. So just wanted to touch on the highlights. The supplies on gasoline are down 5.6 million barrels. We're producing less oil at 13.1. That's down from 13.3. We are treading water. There's actually a $600,000 barrel a day production decline that we face every single month, which means all of it is on new production. If you want to learn more about that, you can watch some of our other videos or join Rogue Edge or Rogue Premium. But we're importing a little less and exporting a little less. I think this had more to do with refinery takes than anything else, and storage.
Yeah, we should be coming in. It's probably had more to do with the turnover season.
Yeah, and that's what I don't draw any heavy conclusions there outside of gasoline drawing 5.6. We could have a big draw on gasoline this year.
Yeah, I don't know, but if you got the refineries not producing it, they may just be pulling out of stock.
So now we'll come full circle. A lot of the crude oil supply and demand is going to come from economics, and this is the economics. If you want to see those, reach out to us down below or join us. We'd be happy to share it with you. Any closing thoughts, Bill? We haven't received any questions, so do you have any closing thoughts?
Wow, we must be able to explain things at such a high level and easy for everybody to understand. They don't have any questions.
I hope so. That's the goal.
I know. I feel I'm that way in my mind. I just don't ever get any outside.
I hope so. I'm an optimist, but I know you're actually trolling. You're trolling the people that are watching right now.
No,
right?
Hey, folks, listen. One thing we want to do is listen. We really enjoy doing this. You giving us feedback, whether it's via email or via the comments, we really enjoy that because it helps us be better at what we do, and that's what we want to do: is be able to provide you with the best data. And really more, we like data turned into information, take information, turn to strategy, strategy into action. That's what we want to help you do. And so what is that famous Tom Cruise from the movie Help Me, Help You?
Jerry Maguire. I don't like Tom Cruise, but I did like that movie. So anyway, listen, folks, thanks for watching. Thanks for tuning in. Really appreciate you listening to us drone on energy. If you have any thoughts, if you have any questions, drop them below. We try and get back to every single comment that we can. And if you would like to come join us, we would love to see you inside and connect with you personally. So if we can help your mission, whether it be trading, whether it be energy analysis, whether it be financial analysis, let us know. We're here to help. We appreciate you. We appreciate you watching. Your time is valuable, and that's I just want to end with my gratitude journey. So
All right, there you go.
thank
And
you.
so we're going to give you your time back beginning now.